Doc here from North America. Good morning, good afternoon, and good evening. And it is Wednesday. Just a couple days away from the end of the week. Happy to hump day, but kind of a short week. We're going to have short weeks for the next couple of weeks. We'll see how that all plays out. Oh, let's put the Dukascopy up so I can see the chat line. So we're going to have some short weeks going on, in the next couple of weeks. We'll see how it all plays out. I was a little surprised to see some of the strength that we saw yesterday. The Swiss found a way to climb into the daily buy, but look at that weekly sell. It's pushing down very comfortably. And over on J4X, let's see how they look at the Swiss this morning. It's following along with the gang, I'm sure. I'm trying to get the commercials, get these commercials out. There you go. So nobody on there yet. That's fine. Let's get the fact check spreadsheet up there. And again, we're at the end of the year. I can't emphasize this enough. I keep on saying to traders, don't get trapped, don't get handcuffed, don't get stuck with anything. Just observe. If there's opportunity, you take it. If it's not, don't push it. And that's usually the way it goes. And that's the way it always should go. You shouldn't get too deeply involved in these holiday markets, or unless you got to settle up, you're a fund manager, and even then, most of the fund managers are basically done for the year. They got all their stuff done. Now they're just doing window dressing at this point, barely that. They don't have to do that. So anyway, you can see there, Swiss line 20, it actually, right there, actually has a 1 in there. It climbed into the daily buy there yesterday with that weekly, but that weekly is fading quick, as you can see. It just keeps on rolling over more and more. So at this type of action, I have to believe we're going to see this thing go into the sell, which means the dollar's going to be possibly weak, or it's, again, I'm going to repeat myself, sounding kind of sounding like I have senility, but in the end result is that it's the end of the year. Anything can go, and it does. Things, and then when you see how they trade in January, it's like, wait a minute, I thought the trend had changed. It's like, no, it's the holidays. It's tax season. Just like Elon Musk selling a chunk of stock so he could pay the $10 billion or $11 billion or whatever it was in taxes. Can you imagine there are politicians out there claiming that he's greedy and he doesn't pay his fair share? The guy just paid $11 billion in taxes. World record in taxes. Why? How can you call it greedy? So, anyway, that's where we're at on the Swiss, representing what we think about the dollar. But again, this is the end of the year. All right, let's check her out. I did see strength in the other two products, which is interesting. I saw that when I was doing the numbers this morning. We're seeing the euro trying to get into a daily buy. See that right there? That's doing it. And the weekly is still climbing. So it's one or the other, traders. It's a trend. I'm going to repeat myself again and sound like I'm like an old man or something, senility. But it's the end of the year. Anything's possible. Anything can go on. It doesn't define the next 6 months or 3 months or 3 weeks. It just reflects what's a necessity for the very short term, 3 days, 5 days, the end of the year. The end of the year is next Friday, not this Friday coming, but the next Friday, and we're closed. So basically next Thursday is it. All right. Now cable doing the same exact thing again. Oh, let's check it out on J4X. Just like you see here on the Swiss, the little green hinky and breaking through the line here. Another day. Let's go to the euro. Right there. And I'm sure it's doing the same exact thing. It's joining in. Yep, see, identical. It looks a lot alike. See that? How that looks a lot alike? I mean, this is a lower high situation, and then our math, is that even out that far? Yeah, I guess that is. And so let's see if we can do this a little bit different so you see both of them at the same time like that. Yeah. So, you had that nice big high, and then in this case here our work was, makes another higher here, but and this is higher there, whereas this is a little behind, but that's the way it goes. This is our, this does a really good job on J4X to try to emulate our proprietary mathematics. So that's why we developed it and show the nuts and bolts of how it works. As I take another sip of the tea. It's tea season up here. All right, now heading over to the cable, we're seeing the same action again. There's cable, and it's lifting through, showing us a volatility signal at the moment. Our weekly has not turned, but it is getting tighter, so that's kind of impressive. If they probably take out like these highs in here, we might see, if we see that histogram move tomorrow above this histogram, we might start to get this weekly get going at the same time, because it's been pretty much of a flat line riding the bottom end of the range. And let's go back to Euro for a second and look at its range that we have established. And we're going to put that there for the moment. But what we're going to do is we're going to go back and look on Chicago Quant to look at the range. Yeah, so that 0.23 seems to be a real strong factor. So it got down to the high 111s, but it did not get down into the 108s. But again, it's the end of the year, so I'm not sure if they do this dance and next thing you know, 5-6 days they're playing above the yellow line and the 0.38, and then they kind of curve over next week, and the next thing you know is that they're at the beginning of the year or something like that. They could literally have to close out positions, or they have to get long positions that put the pressure onto this market. That's it. Like I said, these are short-term actions. Don't take them serious being long-term. I do this every year, trying to emphasize it 6 weeks ago, 5 weeks back, and say, here we're going into the last 6 weeks of the year. Be careful. The actions don't represent the true trend of a market right now. It's more of what to do, just like Elon Musk, who exercised $11 billion worth of stock to pay taxes on. They are things that have to be done. And after they get them done, they go back to doing their normal thing, whatever that is. All right, now let's take a look at the Turkish Lira. We did read a little about that. I didn't read, I never got a chance to really read what they actually did. Got pulled in too many directions yesterday. But it sounds like President Erdogan really did as best as he could to get this thing to break down in there. That's one heck of a move from the almost the 18 area right there. I think that's not up at 18 area, and broke it all the way down to, where was that? It got down to 11. 7 gigantic handles. Wow. So I don't know. Maybe they're selling future opportunities. I have no idea. Selling anything and everything they can to buy their currency. I don't know. No idea. Maybe he's changed policies. Maybe he did. When you look at this product, let's go take a look at it through J4X, because you can really scrunch it up and look at it more deliberately, I guess you could say. When you look at the Turkish Lira, and there's the dollar Turkish Lira right there on J4X now. And you've been the prime minister and the president now of this country for, I don't know, decade, I guess it is, something like that. Less than a decade, I don't know, something like that. And so it goes from 1.5 to almost, in this case against the dollar, from 1 to 18, okay? So it goes to 2, then 2 to 4, to 4 to 8, 8 to 16, and we were starting to get, I know, it was 1.5, that's what it was we were saying, 1.5. So when he became prime minister, it was 1.5, so 1.5 to 3, 3 to 6, 6 to 12, and the 12 to 24, and we thought maybe it would stall out in the 18s. Well, in the euro it did not, but on the dollar it has. And he changed policy, or did something. Like I said, I haven't read it yet. I have to go back and read what he did. I just haven't had the time to do it. But it's very impressive, whatever he did do. Maybe he's reversing his policies. when you have the same consistent policy for all these years, and your currency goes from 1.5 to 18, maybe if you just reverse what you've been doing, might work. So in other words, everything you've done all those years, maybe they just don't work because your currency keeps on doubling in price. So maybe he declared that he was going to do the opposite. I don't know. If anybody knows out there what the new policy is, give me a yell. Say it up on the chat line. I started to try to read it during the trading yesterday and got lost and forgot all about it. But we have to take a look and see over the next couple of days. I will find out what the policy change was or what he did to change this to happen. But I guess he needs to keep on doing it. These things are really got out of hand, out of control. All right, now let's take a look at it against the euro. Now the euro really read this even better. Right there, there's the euro Turkish lira. Matter of fact, let me just move this over for a second and say this. It's not in a daily sell yet in the dollar Turkish lira. You see that? It hasn't gone into a daily sell yet. Oh. So now, let's take a look at the euro Turkish lira. And that, I believe, went into a sell 2 days ago. Yes, this is a third day now. Third day in a sell. So this euro Turkish lira is definitely more accurate and much more interesting of a pairs trade than the dollar Turkish lira. And as you can see here, it went into that sell right off of that slam. And gave you a nice little profit, but you can't really take the trade because, again, look at the weekly, it's so strong. So the one thing you definitely don't want to do is be trading to go up at the moment. That's about it. So it's kind of like a neutral situation. You want to be neutral. You don't want to be long. You don't want to be short. You want to be neutral. You don't want to be pulled into the wrong direction. So yeah, the euro picked up on that. It's a definitely much more sensitive, definitely much more accurate pairs trade to watch. The euro against the Turkish lira. And that, I guess, is what we say about that. So, it's kind of interesting. And it will be interesting to find out what policy change they did. Because that one, oh my God, we thought this thing would get stuck at the 18. That's what we thought. We thought they were all going to get stuck up in the 18 area. And, maybe this would have gone up to 19 or something. This thing got to almost 21. 20.73. It was chasing after the next double, which was like, oh my God, it's going to go from 12 to 24. And we thought, well, maybe it'll go halfway there, so it'll go to 18. Well, it did on the dollar. It stalled out at basically almost 18 perfect on the dollar euro. Dollar Turkish lira. The high is like 90 something maybe. Yeah, 94.81. So basically almost 95. So it went to 1795. So it almost hit the 18 and almost did the double again. Can you imagine that? No, I'm sorry, not the double. Half the double. That's it. Half the double. So fascinating in every which way. Truly fascinating. All right. From there, we drift over to the Canadian. See what the Canadian's up to. And there's the dollar CAD. But it sure does say one thing. We've been talking about taking the dollar pairs trade off the spreadsheet and putting the euro Turkish lira pairs trade on there. I think that's the way more accurate thing to follow. Let's see there it is. I'm trying to put it on J4X here. There it is, right there. There's the CAD. Is that a CAD? Yeah, there it is. And so on that, you see there, it's banging against the top of the range. We'll see how that does its little dance to see how it treats staying at the top of the range. I myself think that, again, I know it sounds like I'm an old man and I don't know what I'm talking about, but it is the end of the year. This is garbage trading, traders. Garbage trading. When I was young, Europe used to close coming into Christmas and not open again until like 3 days after New Year's. They'd just be straight closed all the way through. In the United States, we'd open up, but it was dead. I remember you'd walk onto the trading floor after Christmas, and you'd walk on the trading floor, and it would be like there'd be people missing. You know, people would just not even be there. You know, it would be quiet. And then, you know, like when New Year's kicked in, and then towards the last 2 days of the year, you know, you had that window situation of taxes or whatever, and then that would trade, and then it would be over with, and we would be waiting for the end of New Year's. I remember one time, things were so wild, they brought in cases of champagne. You know, it was so dead, they brought dozens of cases of champagne in, and they were like, you know, they're like bottles of soda or pop, you know, just sitting around. You could just open up a bottle of champagne and start drinking it. Oh, Lord. The good old days before all the things got crazy. All right. From the Canadian, we're really moving fast today, too, without anybody asking any questions. So the Canadian is hitting the top end of its range. It's still in that weekly buy. It doesn't seem to want to give up there. And we have to wonder, you know, are we seeing strength in gold or silver? Is oil firm? You know, is natural gas doing anything? So let's dance our way over to that sector there. And we'll take a look at gold to start off with. And do the same thing over on J4X. And gold, what do we have on the spreadsheet? On the spreadsheet, there's gold. So we're in a daily sell with a weekly buy. You can see here we got that, you know, a couple days of red hinkies there. And let's move that up a little bit. Where's my lines? There we are. And you see this thing's trying to roll over. And that is the gold there on the Chicago Quant chart. Widen that out a little bit. Like so. It's still holding up in the buy. And is that right? What am I looking at there? No, that's CAD. I'm sorry about that. I was going to say, I didn't think gold was in the buy. Let's roll that over to there. Yeah, gold is kind of, you know, just like J4X, kind of sloppy, going nowhere. Doesn't seem like they can really, they can't get any conviction into these markets. The one that was trying to do something was the silver, which was kind of neat. It says still in a buy, I believe. Yeah, right there. Silver's 2 days in a buy now. We'll come back to that after we finish off the rest of the pairs trades. And then oil. Let's see what the oil is doing this morning. Right there. And oil is also kind of just dancing sideways. I know we're in, I think you can see it on the fact check spreadsheet. Right there. Oil, didn't mean to do that. Upload, no, I don't want to upload it, but it's the only way to get out of this by saying yes I do, and then I can exit. But you see oil right there is 1 day in a buy, 7 weeks in a sell. So not really doing anything too particular to it all. Let's check it out on Chicago Quant. I think it's showing a buy today. Trying to get into the buy, yeah. So, I mean, it is in a buy. 1 day in a buy. Doing a second day in a buy. The weekly is starting to turn up, as you can see here. Right there, it's trying. And so we just have to kind of watch and see, you know, how much. I mean, there's all kinds of talk about higher oil prices, higher natural gas prices, something about Nord Stream 2, I don't know, there's all kinds of stories out there. I myself just take it in stride. That's the only thing I can do. You know, I try not to get too locked up into it as much as I am, paying attention to all the decision-making process of, you know, the politicians, because they do move the markets. So, indeed, indeed. All right, from there, let's go back to, because of the way we see the metals complex, we have to assume that, you know, South African Rand is basically doing nothing particular at the moment. Let's find it. Right. South African Rand, dollar Rand, there it is. so you can see it too. Let's do it on J4X at the same time. There. Someone just texted something funny. So yeah, there it is. You can see the ZAR trying to, I guess it's moving up a little bit. Got a lot of red dots, a lot of hinky. Notice Chicago, the J4X is trying to turn up a little bit more. It's got that little bend going on just like we do here. And it's already generating a green. We haven't gotten that far yet. It's not generating a green yet. A green. It's a green. That's what we're looking at. The generating of greens. All right. Now, what's next? Let's tune into. Let's take a look at the ruble, see what the ruble's doing. Imagine that in some ways. Boy, you know, that's a pretty active product, you know, so, I mean, that's a currency that floats, so you have to respect the Russian Federation for that, at least, if nothing else. They allow their currency to float. They have some flavor of capitalism going on. And that's pretty cool. There's a lot of capitalism going on in the Russian Federation. And you see there on J4X, it's breaking down again. Let's check it out over here. I think it's like 5 days in a buy or something like that. It's a bunch of days. Over on, let's see, where's scroll this there it is right there. Yeah, so ruble. Right there, six days in a buy and 6 weeks in a buy. So it's trying to find a way to dig themselves out of it, I guess. Starting to get stuff. Besides that, I'm starting to get stuff where people say, out of office now for, you know, for the next few days. People are starting to walk away from the year already. Alright, so you can see here on Chicago, you know, it's generating a red and it's breaking down. And we're seeing the same type of action here on the J4X. And it's just fighting its way back down again. Maybe we'll see, I don't know how the new year will be. You know, I don't have a strong opinion. One thing is for sure, I feel comfortable about saying this. The US government going into January, February is going to be pretty quiet after they get done fighting with themselves again in January going into February. All the candidates are going to be thinking about is running for election in November. Well, first of all, trying to get through the primaries in March and April and May, because the primaries come up like that. So all of a sudden, the power, you know, who runs the Congress, who runs the House overall, and the presidency, he'll keep on yakking. But the others will start to be like, no thanks, I got an election to deal with, and so I'm not going to pay attention. Yeah. Yep. That's how I see it. So you won't be seeing a lot of surprises. Maybe you'll see some executive orders. I mean, Biden can only do that. His political allies in the House of Representatives and in the Senate will probably ask him to do some executive orders to try to make it look like they did something. But his first year is turning out to be one of the worst first years of a president ever. He's got the lowest polls of any president in history, especially in the first year, no less. It's like as if he wasn't really elected. That's the real weird thing about it all. It's hard to believe that he got more votes than anybody else in history, because it seems like nobody likes the guy. So it's really weird. All right. Let's see where we're at. From there, we mosey along to the yen. I think the yen is trying to do some stuff. Now, talk about tax situations. The yen is definitely always an animal to that stuff. In other words, it's, it is influenced enormously because they're very disciplined there in Japan in taxes. So you can see here a couple days in the buy. It's been moving up. You can see the weekly is trying now very aggressively to get into the buy for the end of the week. We're even see the super is 47 right there, and we can see that the 3 is a +5 now. So we're actually dancing our way up a little bit here. And on J4X, you can see the same thing. Big green hinkies. Where's the lines at? There they are. The lines are breaking through the dash line. The floating zero line, as I like to call it, or three-dimensional. And then over here on right there, you see it is 1 day in a buy, 5 weeks in a sell, which looks like that'll get changed. And again, we are at that point where you don't want to get too crazy about it, because in the end, it is the end of the year, and it's going to take some time to get it all resolved. All right. From there, we go to the last currency pair that we look at, and that is the Mexican peso. There it is. Boy, you can see it stalling out altogether. The weekly is trying to show some weakness. It's below the time manifold here, and at the same time, it's trying to break apart and take out the zero line. You can see the daily doing the opposite action at the moment, just trying to push up. And then when we go over to J4X, right there, it's trying to lift up on a daily. Looking a little odder than that, from that hump. What else can we say? Lots of red, like us right here. So you can see that pressure that's playing on the product itself. Again, I don't really take any of this too serious, so you just got to let it be. But what you can't do is you don't want to walk away from it. You never know when you might need some type of product for your portfolio or your position or something like that. So sometimes what they used to do, people used to look at it and they would say, wow, this is an opportunity. I've been trying to buy this for the last 6 months and I can't get it. Now I can. Well, if you're a fund manager and you think like that, which is fine, which is natural, because unless your fundamentals and everything you make decisions on change, well, then you go and you buy it. So that's why you see these snapback rallies. Money's out there waiting. There's trillions sitting on the sidelines. Trillions. Remember, the Fed has flooded the world with capital. They're trying to extinguish the potential of a Great Depression. I myself don't see the tools for it, but there were some events that occurred that they did save. In other words, the Great Depression, and we can break away from this conversation if someone has a question, but the Great Depression, one of the great disasters of the Great Depression of the time was that companies and businesses and banks went out of business. And so people who had owned their bonds or they had money invested in them lost it all. And so you might have been, a very responsible person, very healthy investor, and you had money sitting in the bank and the whole bit, but the bank went under, and when the bank went under, you lost your money. Okay, so in other words, you invested in a bank hoping, like a stock. When you put money in a bank, in many ways you were doing it just like you were choosing a stock today. In other words, something that has earnings, has growth, has ability to have a future, that type of thing. People don't realize that. So when Mr. Bernanke wrote his thesis about, what to do if another Great Depression came along, we had created so many safety nets since that point. FDIC and SLIC. In other words, these were insurances now that would not allow a bank to go under. Okay, so what happened was the devastation of our financial system was so big. Basically Merrill Lynch, Lloyd's of London, Citibank, Deutsche Bank, Santander, Bank of Scotland, Wachovia, I can go on and on and on, of major institutions. Bear Stearns, Lehman actually did go bankrupt. That's when they realized that they couldn't let anybody else go bankrupt. And so they created, they put together this thesis of the QE, and they merged all these bad banks with good banks that were solid, that didn't do the financial bad stuff, hoping that that would clean things up. Problem is that the politicians saw the free money. Boy, when politicians see the free money, they'll never let it go. So here we are, almost 14 years later, still in QE. When they saved all these institutions, they're done. It's over. It's okay. No worries. It's done. But no, they saw that free money and they thought, wow, we can spend, spend, and spend. Just print, and print. So that's what the problem is that it did its job. It saved the banking and the global financial system so it would stay established the way it was. Problem is that the same dunderheads, as we like to call them, in other words, people who are not very smart, are still in charge. So in other words, you can't really walk away because the people that helped to cause this event are still in power in many ways. And so it's like, oh shoot. So in other words, they had it was fine to do the QE. It wasn't fine to protect the leadership and individuals that instigated the problems. And so that's why we're stuck with QE now, because the politicians are protecting them because they get, contributions or their allies or whatever. There's many reasons for it. Many different connections, not reasons. We know there's only one reason, and that is to keep this established quo. In other words, not allow it to disappear. Let the people, even when they were poor investors, be chairmen of corporations because they were merged into other corporations that kept them alive. That type of thing. So that's what the problem is with QE. So it takes take a leader like what's his name? What was his name? Trump. Took a leader like Donald Trump to try to start cleaning this mess up. That's why the stock market literally doubled under Donald Trump. And raising rates at the same time. So they were raising interest rates here in the States, and the stock market doubled at the same time. Because, a combination of all of it, the good and the bad, had that influence. Whereas there are leftist economists and so forth said that if you elect Donald Trump, it'll destroy the economy. It did destroy the economy. It did the opposite. We had the lowest unemployment for all kinds of sectors, from black youth to black families, to white families, to lower educated families, to Hispanics. It went on and on and on. We had the lowest unemployment numbers. We had growth galore. We became a self-supplier of energy. Now Mr. Biden has shut that all down. So anyway, the end result is that that's where we are today. When you look at all these situations, is that the quantitative easing has a hard time going away because the politicians got their fingers in it now, totally, 100%. So we're going to see, because I did hear some people saying things I say this morning aloud on the TV, which is kind of impressive, and that is that after Mr. Powell does get sworn, he's nominated now by Mr. Biden. When Mr. Powell in February, late January or February, something like that, gets sworn in again, as the Fed chair for another 4 years, then don't be surprised if we start seeing that punch bowl, as they used to like to call it, like at a party, be pulled away. So everybody's happy and fun and drunk, and all of a sudden you go, okay, everybody's too partying, and you pull the punch bowl away. And that's the feeling we're getting. So the actions that we see here over the next 5 or 6 weeks, people are just adjusting themselves to that possible situation. All right, from here we're going to drift over to the energy complex again, since we've done all the currencies. It's a quiet day and no one's really saying anything particular, so we'll just investigate what's going on. So right there you can see crude in February, and you can see it's holding up firm, and we'll put it up on, we did that there, right there. Let's take a look at June. We have a client that's following the spring crop of oil. It's in the ground now, growing. And so we'll take a look at that and see how that looks. That's been kind of more interesting. It's nowhere near as obviously as volatile. You can see here how tight it has been. It gets into a sell, barely. It gets into the sell here. You have that sell off one day, and then it gets right back into the buy again, and it's just marching along. It's interesting. You can see the weekly is trying to get up much higher. Let's see how it looks on the front month. See, the front month it's much lower. The green line's not through the time manifold. The white line doesn't look like another tick could push it through. But when you go and look at crude oil in the spring, let's go back to it again. Right there, the June contract. You can see the green line is through the time manifold on the negative side. It's not far off of going into a weekly buy. So, that's I guess you could say that's where they start to line up and take advantage of the weakness and the quietness right now. Maybe we're going to see that $100 oil going into, February or March or April. And you don't know what could instigate that on some levels. You got to assume one thing is for sure. We are going to have the most powerful opposition parliament or Congress since the U.S. Civil War in the 1860s. The Republicans are going to have so much power that it's going to be veto-proof, and it's going to be very interesting to watch. Very interesting to watch. All right, from there we jump over to the silver contract. We looked at gold, unless someone wants to see gold. Ah, there we go. We got there. Chris. Oh, someone new. I haven't seen it. I don't understand the language. It's all right. I'm sorry. Hello, Christina. Not sure of the language. Is that Spanish, possibly? I think that's Spanish, right? But if you put a symbol up there, whatever product you're interested in looking at, we can put it up there for you. Because that's a universal language of the symbols of the products. Let's see. Let's go to, where was I going? Oh, yes, silver. Let's check out silver. While we're waiting to see if there's a product that we could satisfy Christina. Or Kristen. It could be Kristen. It could be a guy, too. It could be Kristen. And let's check out silver. And there's silver. Silver's trying, looking a lot better than gold. But one thing is for sure, and that is it's been in that weekly sell since up in here. And we're just coming out of like 20 some odd days in a daily sell. It finally got into a buy there. So, we're seeing a little bounce back. And we'll see if we start to get some life into it over the next week or so. If it starts to turn the math up and they try to front run it, or it's the end of the year, or could you imagine? We're seeing $22 silver basically. Wonder where was silver in January? Let's see where silver was last year. So we're going to put a weekly chart up on J4X and see where it was. I don't know if it was in the 22s or not. I had my doubts personally. Let's see, there's 21. Oh, there we go. Okay, so let's make that bigger too, like that. So it looks like there's 20. And so at the beginning of the year, it was up in the 26s possibly, 25s, something like that. So money could be coming into silver just specifically because it's down for the year. And funds like the dollar cost average in, that's a trading strategy. So just that alone could be the reason why we're seeing some strength in the silver at the moment. Okay. So that's, we're seeing that action. So I imagine that could be literally it. It's just they have an opportunity. That's that opportunity I keep on saying to you in this time period. Basically, you don't want to walk away from everything, but one thing you don't want to do is get handcuffed into a trade. So what you want to do is you want to be monitoring, depending on what you're doing. If you're an intraday trader, it doesn't really matter. If you're an investor in a weekly and daily or monthly or yearly, there might be free opportunity, very cheap opportunity when you're watching. So you kind of have to pay attention and not pay attention. You have to participate and not participate. It's that type of circumstance, All right, from the silver, we'll go, let's see, what did we do? Oh, I know, we went from oil, that's what. I should have stayed with the energies. So let's do this. We'll go to natural gas, and then we'll come back to the metals complex. So there's natural gas. You can see that's doing the same thing as silver. And also, I think, they might be averaging in over, from the last, let's see what we have here. Let's tighten up stuff. So, pretty much we're basically playing with the lows of the last 6 months. That's pretty much where we're at. I mean, the product was trading in the, where is that? That's the 330s area, right? At the beginning of the year. And now we're playing with the 360s. So they could be doing the same exact thing, and the pattern even looks the same right now as silver. And also in the same circumstance, we're in a weekly sell for a bunch of weeks, just like silver. And it doesn't look like it's trying to really break out in any fashion. So they could literally be, oh yes, yeah, it was Spanish from Chile. Hey, a South American, how you doing? Greetings, thanks for your content. Although I do not understand English much, I understand the graphics that you are showing, and with that I understand better. Exactly, that's the universal language here. I mean, this is a global podcast, and coming out of Latvia, and basically, we're one thing is for sure: numbers are universal, and so stock symbols, commodity symbols, so forth, are all universal. So yeah, well, Kristen, we're really glad to see you this morning. Welcome to the hood. And we have if you ever care to see about any product, just put it up there. Put it on the chat line if it's gold or oil or a stock or whatever, and we'll go hunt it down and see what our math says about it. Now, from there, we'll just take a look at that heating oil that we look at really quick every day. And that's holding up very well, too. It's getting ready to expire any day now, also. Matter of fact, we should probably move it to the February contract. But that's it right there. And it's showing the same things, where they're just not racing towards it at all. You can see that we're in a weekly sell now for weeks. And obviously, the pressure's been down. Okay. From there, we'll jump over to the metals complex again, and there's copper. And you can see copper is trying to do the same thing. Now, copper is more trapped in that nice tight range of $4.60 to $4, which is pretty interesting to actually see a established situation like that. But then you have the inflation going on, and there's a lot of reason for not being paranoid about the product. And so you can see here, copper on J4X, same thing. It's lifting up, and we're seeing that pressure on the upside. And you can see over here on the spreadsheet, so we widen that out a little bit like that. See that strength in there. And then over on the spreadsheet itself, the fact check spreadsheet, right? Let's see, where's that? Right, it's right there. There it is. High grade copper. We're 1 day in a buy, but we're five weeks in a sell. So it's telling us that the overall trend has been on the downside, as you can see right there. And you can see over on our Chicago Quant site, same situation. We've been in the sell since over up in here on this week right there. And it's gone back up to it, back down to it, lower high, new low. Now we're playing around with trying to break out have a higher high. And you can see our math is trying to turn up. You can see our weekly is trying to turn up right here. Oh, you're welcome. We like to say that there are no foolish or dumb or ridiculous or stupid questions. There are only long answers or short answers. That's all there is. We always believe that. Any question is welcome. Any question at all. All right. So there's the copper. Let's see. So we've done copper. Oh, let's check out platinum. Platinum seems to be stuck in the mud, as I like to say. There's platinum. It's in a buy for a bunch of days here, but it doesn't do anything. It's at the on top of the $50 area from $900. Our weekly is not really turning up much. It's on an upwardly slope, but not really going anywhere. It's been in a weekly sell since this area here. That's why this pink line is there. That's the close of that week, confirming that it's in a weekly sell. And so that's how we look at this whole thing. All right, so we've seen the energies, and we've seen the metals complex. From there, we'll drift over to the stock indices, see what's going on. Now you can see here, this is the Nasdaq 100, or better known as the Tech 100. And we're in a weekly sell since this week here. And you can see it's gone down, gone up, gone down, gone up, gone down, made a new low here 3 days ago on Monday. And it's trying to lift up here. A little bottom fishing going on. You can see the weekly chart. This is the weekly indicator down here at the bottom, and showing that we went into the weekly sell in this week here. And so you can see, that's when the white line and the green line go minus. So when it started to get into the sell, like right here, we start to watch, and we're in a daily sell. This is daily sell, daily buy, daily sell, daily buy, daily sell, daily buy. That's what that does. So that's how you read the charts themselves. So you can see here on the Tech 100. Let's put it up on Dukascopy too. Right there. What we're seeing is that they're doing their little bottom fishing. With the bankruptcy of Evergreen, which sectors do you think will be the most affected? Let's see. I guess you have to say, who are the investors more? Because remember, it's a closed situation. We always kind of look at China like a colony, but an independent colony. So they control everything they do themselves, and their currency is fixed, and so we were showing yesterday where they're plowing $200 billion into their banking system, which is domestic, but they can't pay $17 million, but they can somehow or another pay $200 billion to prop up their own domestic banks, and that's because they control them, and no one can take that money out of the country. So in other words, when you owe money, when companies in China owe money to foreign investors, chances are they're not going to get repaid. Evergreen is an example of it, and the other property company is too. So it's a dangerous place to invest. It's very dangerous because they only will prop up things that are domestic in nature. So the banks are being lent to $200 billion, so they can probably prop up, and they cut their overnight rates and things like that, so they can prop up property from Evergreen, Evergrange or something like that, Evergrande, but they're not propping up the investors. The investors are losing the money because that's the way China works. So I don't think you can. I wouldn't try to pick and choose investing in China at all, as far as I'm concerned. Not until they have a floating currency. They don't have a floating currency, and until they have a floating currency, I don't think it's a serious investment. I think you can put factories there and have slave labor I mean, that works pretty well. And so you can produce cheap products. But I wouldn't be a heavy investor there at all. In other words, I could see, well, I wouldn't do it if I was a corporation. I would not be using slave labor. So to me, I'm not a big fan of investing in China, and I think China is more of a paper tiger solely because they say GDP is 6% or 5.5%. We're growing every quarter at 5.5 or 6.5%, but that's with a fixed currency that doesn't trade. So imagine if it goes, just imagine if it altered itself like the way the ruble did, or the Turkish Lira. So in other words, they're floating currencies, so they have to deal with market forces. So if you're buying into China, you're really making, as far as I'm concerned, a really bad mistake. So I don't have a really intelligent answer more than that. My most intelligent thing to say about it, when their currency is a floating currency, then we'll know it's time to start to invest in China. You'll be able to start to evaluate what is the fair value prices. And so if the yuan goes from 7 fixed to like 24, all of a sudden their GDP is going to go from 6 to like 1.5. So it's all the only reason the GDP is so high is the currency is fixed. Something you won't hear too much anywhere. People will not talk about that out loud. So that's my opinion. What with the bankruptcy of Evergrande, which sector do you think will be the most affected? No more or less than usual. All the foreign investors. All right. From there, we'll go to, where do we go from there? I hope that answered your question. I know it's a little off the wall, but it's the way we function around here. We deal with reality every day. We're not angry at them. We're not happy about them. We're just looking at the facts. Now you can see here the S&P 500, which is a pretty international type of index. Something like 50% of the companies are incorporated outside the United States. So you can see here the strength is still coming in, but we are in that weekly sell since this area up in here. It goes up to it, goes down, comes up to it. You get into a daily buy like right here, and it takes it back up to it, and then it gets into a daily sell, and it breaks down a little bit. Then we get another one here. Now it's breaking down. Now we've gone into a daily buy here. We'll see how long that lasts. And then the Dow Jones Industrial Average. I'll show you that right there. There's the Dow. And that's just underneath, trying to get into a daily buy. The weekly's jumped up pretty dramatically. That's kind of interesting. It's been in the weekly sell since up in here. Up in here. Up into the 36.5, at all-time high area, went into a weekly sell. Had a nice sell-off, went into a daily buy, I guess it was right here. Gave a nice big gap up, so kind of missed most of that solely because we're in a weekly sell here. And, the strength has been there, then it goes into a sell, goes down a little bit. That you could take the trade for. Then you get another pop, and then you get another sell, that trade you can take because we're in a weekly sell again. And another 3 nice wins out of it that way. And then now we're trying to get back into a buy again. So I'm not really confident that anything's long at the moment. I know it's going to last long in trend, but we'll see how they play that sucker out. All right. What else do we got to say about any of it, I guess? If there's any questions, fire them out. We're going to wait around for a second. I think we'll take a look at interest rates here. Here's the 30-year, the March 30-year contract. When the price goes down, interest rates are rising. And so we are in a weekly buy since back here. And you can see we are flirting with interest rates possibly starting to begin to rise. It's pushing into a weekly sell here this week. At the same time, we've been in a daily sell since like right here. And it's kind of trying to slope down. So that's the action we're seeing on the interest rate factor. We'll see how long that lasts. There is something absurd like 14 or 15 trillion, or if not more, 16 trillion invested in minus investments. where you buy it and you've lost money the moment you bought it, which is really weird. Just shows you how much capital has been flooded into the world market financially to keep things afloat. Why, the media refuses to talk about it or communicate about it or even speculate about it or, just even make stupid jokes about it is a surprise to me. So, because it's pretty much right in our face every day. We can see it, we can smell it, we can taste it, and we can see it. And we can even touch it. So anyway, traders, that is what it is. We will see you all tomorrow, same time, same channel. And we're just going to keep on broadcasting until we can. So maybe we may even broadcast on Friday if it's set up for it. We will do it. So this is Doc from North America. Everybody have a safe and smart trading day. And we will see you all tomorrow, same time, same channel. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders, ta-ta.